In today's video, we're going to talk about how the banks collapsing are going to affect mortgage interest rates, the housing market, stocks, and crypto. So if you find value in this video, please consider subscribing. So as we all know, over the past week, Silicon Valley Bank collapsed, the second biggest bank to collapse in US history. The biggest bank to collapse was in 2008, which was Washington Mutual. The next day, Signature Bank became the third largest bank in US history to collapse. So just to give you guys some kind of perspective on how big of a deal this really is, there are banks across the country, small banks that collapse from time to time. So in 2020, there were actually 4 banks that collapsed. So I'm going to name them and we're going to compare it to Silicon Valley Bank and Signature Bank so you can see how big this actually is. So in 2020, 4 banks collapsed. Alameda Bank, which had 69 million in assets. First City Bank in Florida with 136 million in assets. First State Bank, 156 million in assets, and Ericsson Bank with 101 million in assets. So again, just to compare, Silicon Valley Bank had 209 billion in assets. Billion with a B. That is 1,000 times bigger than the biggest collapse in 2020. 1,000 times. Signature Bank has 110 billion in assets. And again, that's an astronomical amount. So 500 times bigger than any of those other banks that collapsed in 2020. Shortly after, Credit Suisse was on the verge of collapsing before regulators stepped in and bailed them out. So that's one piece of the puzzle. Moving on to inflation information that came out this past week. So the producer price index came out. That dropped from 5.4% in February 2022 to 4.4% in 2023. So 1 full percentage point. So big drop in the PPI. So the PPI is a producer price index. It's basically the cost of wholesale goods. It does not include food or energy. So the cost that wholesale goods are being sold for. So when companies get wholesale goods for a cheaper price, those lower prices will then be passed on to us as the consumers. So we should expect the prices of general goods to come down, again, excluding food and energy. So all of these banks collapsing and the PPI, what does this mean for mortgage interest rates, stocks, crypto, and the housing market? So let's start with mortgage interest rates. So just in this past week, mortgage rates dropped on a 30-year fixed from a 7.5% to 6.5%. Again, that varies depending on your credit score, down payment, etc. But mortgage rates dropped 1 full percent. So before Friday, before these banks collapsed, there was a very heavy chance that the Fed was going to raise rates by 0.5% at the next meeting, which is on the 22nd of March. That prediction was overturned. Now there's a 65% chance that there's not going to be a rate hike at the next meeting. In my personal opinion, I think if there's no rate hike, that will freak everyone out because that means we're in bigger trouble than we think. And I think there's probably a good chance that there will be a 0.25% rate hike at the next meeting on the 22nd. So what does this mean? This means with the banks collapsing, the Fed might be at the end of their rate hike cycle. So chances are after this meeting in March, there's not going to be any more rate hikes. Rates will stay the same, and eventually they'll start cutting rates because we're in deep trouble. This is kind of the crisis or trouble that the Fed wanted to create to slow down the economy, and these banks collapsing, hundreds of billions of dollars in stimulus to bail these banks out. We're not going to have higher rates. Mortgage rates are going to come down over the next 6 months, and I predict they're already dropping under 7. We'll probably see rates under 6% in the next 6 to 9 months. So how is this going to affect the housing market? So again, in my opinion, this is going to stimulate the housing market. It's going to stimulate home values and home prices, because the biggest issue that we have in America with housing is inventory. We have a huge inventory shortage. So again, just to give you a perspective of how little homes there are on the market. As of today, in America, all across the country, there are only 570,000 active listings, according to Realtor.com. So how does that compare to the past? Well, if we look at 2016, just 7 years ago, in 2016, we had 1.4 million homes for sale, active listings. So in 2016, we had about 3 times as many homes for sale as we do today. So simple supply and demand economics, low supply. If demand even goes up a little bit because of rates coming down, we're going to see the prices of homes go up and appreciate pretty rapidly, but we'll see. Depends how low rates are. How does this news affect stocks and cryptocurrencies? So over the past couple years, with the economy going into a recession, we've seen stocks and cryptocurrency moving together. So that means stocks go up, crypto goes up. Stocks come down, crypto comes down, especially the S&P 500. So they've been coupled together. Over the past week, with all of this news coming out, Bitcoin has shot up over 30% in price, whereas the S&P 500 has only gone up 2%. So why is this happening? There's 2 main reasons. Number one, with all of these banks collapsing, really what this is an advertisement for Bitcoin. This is exactly why Bitcoin was created, to take the control of money out of the banks and into your hand and my hand. If you know how to safely put your crypto on cold storage, you're not exposed to any exchange like FTX, Coinbase, or anyone else. You have it in cold storage. There's no exchange can go down and you can lose your money. These banks collapsing meant all of these depositors, the people who had accounts there, could potentially were at risk of losing their money. Now it looks like they're going to get bailed out, but with Bitcoin, you never have to worry about anything collapsing. So the banks collapsing was exactly the reason Bitcoin was created, and there's more trust in Bitcoin, and that's why the price is going up. Again, just my opinion. The second reason they're decoupling, stocks and crypto are now not moving at the same pace because Bitcoin's shooting up, is because with the banks collapsing, that's bad news for the markets, bad news for stocks. So that is why stocks are now just slightly up, whereas Bitcoin is up 30%. So that's the effect we're going to have on the banks collapsing on all of those markets. So we'll just have to wait and see how it plays out. Again, these are just my predictions. Thank you so much for watching, and I'll see you guys on the next video.